Hello, welcome to today's edition of Beyond Reasonable Doubt. We are continuing with the life insurance myths, or in other words, the misconceptions about life insurance. So, my name is George Wong, and I'm excited to share with you uh, this little nugget. I hope you are enjoying the series along. I hope you already got to the point of clearing your doubts about some misconceptions about life insurance so far. If not, stay tuned. We still have a lot in package for you before the end of the month. So let's dive right into it today. What are the myths we're going to cover for today? So let's go right ahead. So the first myth for today will look at those who consider that life insurance premiums, the premiums they pay for life insurance, is tax deductible. Were you thinking that way as well? Well, let's get into the facts. First thing to know, if you have your personal life insurance, it has nothing to do with the Revenue Canada. It's not tax deductible. You cannot do that. But however, if you own a business and you buy an insurance, a life insurance, to protect the assets of your business, yes, it is tax deductible. The premiums become tax deductible. So the very last point here, you see, as a business owner, to be tax deductible, it has to be an expense, a business expense. And if you buy a life insurance to protect the assets of your business, then the premiums you pay become an expense on that business. So yes, in this case, it is tax deductible. That may be an advantage for why a lot of people like to own business in North America. They have a lot of business expenses which are deductible during tax season. So let's ride on. I hope this one has cleared that doubt for you. If you are a business owner and you didn't structure your risk coverage, your life insurance in a way that it can cover your assets, maybe this is a point for you to consider. It's a time for you to look at that, because it can help you deducting those premiums. It's already part of expense for your business anyway, so why not deduct them? And if you're really in doubt, talk to your accountant. They will help you in that regard, or your financial advisor. Thank you. The next myth we'll look at is those who consider that it's better to invest their money than to get a life insurance. Here I want to put it like, there's no right or wrong, but the concept here is what is going to add you value. You're weighing the balance. So I hope that one is a little bit much more clearer. What is more valuable to you? So unless you break even, what I mean by break even, if you have so much assets that they can cover any of your potential risk, your assets have to outweigh all your potential risk. From the beginning, those who have been following, the whole concept of insurance is risk management. And if you already have assets that cover all your potential risk, then you might consider it not useful. But if you follow along, I'm still gonna let you see a reason why life insurance will always be very valuable. So you need to have a current will. If you have those assets and you don't want life insurance, you need to have a very current, up-to-date will. Why do I say that? If you have a will that is current, those assets, when you pass away, there will be a long process to get your estate divided to your your generations or to your family the way you would like it to be. So something to consider, you need to have a current, up-to-date will. Also, there are probate fees, and I'm going to go into an episode where I will talk about probate fees. The probate process can be very, very lengthy and costly. The probate, to simply put it, when you pass away, all your assets, including your bank accounts, are frozen from your family until your taxes deemed over your assets are evaluated, assessed, and then they will find a way to recover those taxes. Then the remaining assets can now go to your family. So to free up these assets to your family, the probate process will have to conclude to its end. And the fact that you don't have a life insurance can make it really lengthy. And the more it stays, it could go anywhere from 6 months to average 2 years. That's an average. Some can go even to 3 years. And the longer this process drags on, the more costly it can be to your family. Something to take note about: if you don't know about process, I'm going to cover that in an episode that will be upcoming, so stay tuned. And if you are not yet subscribed, it's an opportunity for you to subscribe to watch out for that episode. It's going to be very, very useful. So if you were thinking that you will invest money and not get life insurance, probate is a very tough one there. No matter what you think, this probate process, having life insurance handy will always facilitate that process with paying off any taxes that will come, any fees from the probate, and make the process shorten. And also leaving cash in the hands of your family immediately after you pass away for the funeral expenses. Imagine dragging your family into this process and they don't have money available for your funeral expenses and other costs when you pass away. Life insurance, we saw earlier in some episode, is an investment. So if you are thinking that you want to invest money and not get life insurance, did you know that life insurance itself is an investment? There are different types of life insurances. It's not just expense. So you might want to look out for that episode where I covered life insurance as an investment. Let's ride on. Let's look at the next myth for today. Our next myth for today: those who consider that they should always buy a term insurance because it's cheap in the beginning and then invest the difference. Well, at least let me congratulate you. If you're thinking you buy term insurance and invest the difference, it means at least you already know something or the value of insurance in the first place. So congratulations, you've got here. But let me put this question to you: what is better compared to best? If you have the chance to go to best, will you stay better? So let's look at the facts for today. We already saw in previous episodes, so if you have not followed, just know term insurance gets prohibitively expensive. So prohibitively expensive means at some point you're going to lose that term insurance. It will not be available. It's prohibited, to put it shortly. So if you're going to lose it at some point, what will be your fallback, your plan B? So the premium outlay, if you get a permanent coverage, we've also seen in another episode that the permanent coverage on the long term would end up costing you way cheaper compared to a term insurance if you drag it long term. And now I want to let you know that benefit is guaranteed. Now this is whether it's term or permanent. That benefit is guaranteed. That's if you pass away. But if you think you buy term and invest the difference, and then when your term insurance comes to an end, when it becomes prohibited, and make sure your investment is doing very well, is the investment guaranteed. Now when you no longer have the term and your investment is volatile, is unstable, what will be your fallback at that point? So this makes the debate really short, why life insurance is always valuable. At least have some sort of it, or some amount of it, the very least. So death benefit is guaranteed, investment is not guaranteed, and the permanent will always be guaranteed because it's permanent. By the way, it doesn't matter whether when you pass away, as long as you have it, it will be there and it's guaranteed. And by the way, we also saw life insurance is an investment. So if you want to buy them and invest the difference, buying a policy here and go invest the difference there. First of all, how much budget do you have spending here and spending there? Have you thought about putting it all in one place? How much more value can it bring to you? How much can it save for you? So something to think about. And if you cannot think about that by yourself, you have an advisor, you can speak to them. And if you don't have one, can you try reach out to me here? I can help you. I can help you with that as well. And now we have come to the end of our myths for today. I want to thank you for watching. I hope that you enjoyed this series on the myths or misconceptions about life insurance. If you have comments about regarding any of those myths, please don't hesitate to put them in the comment section. You have questions, put them in the comment section. I can address them to you personally. If you want to reach out to me, check in the description for this channel. You will find a contact there to reach me. If you have questions you have an advisor, please reach out to them for more detailed information, for more clarity. We are here to educate ourselves, bring more awareness to life insurance. Thank you for those who have been following this series. This particular episode will conclude the episodes on life insurance myths. So we shall be looking at the probate process in an upcoming episode. So thank you for continuing to watch and to support. Your presence here is a huge contribution to the awareness of life insurance and by motivating me as well. So thank you and stay tuned for the next episode. If you like what you heard today, please click on the like button. We'll appreciate that. Why not share this with somebody close to you, so they can benefit from this as well. And like I said before, if you have not subscribed already, for you to get the next upcoming episodes, please subscribe to the channel so that you'll be notified automatically a new episode comes up. Thank you and have a wonderful day.